Hey guys, quick question. Have you ever considered buying real estate in the Southern California market, but you're just like, I can't handle that 20% down payment. That's insane. Who's got $100,000 sitting around, ready to buy their first home? Well, my name's Eric Loya, and I'm with Father's Plan Realty. I'm actually a licensed real estate broker as well as mortgage lender serving the Southern California market. I wanted to talk to you guys today about a wonderful loan program called the FHA loan, which actually can reduce your down payment from 20% to as little as 3.5% down. There are a little bit of things to consider with this particular loan, so I wanted to share some insight and some slides I've got for you. So let's jump right into it. I'm going to share my screen with you guys so you can see what we're going to get into. All right, so an FHA loan, there's also another one called the FHA 203K loan, which I'm going to dig into, which is actually really cool. So I'm going to cover four factors. What is it? What makes this loan different from any other loan? What are the rules? And what are the loan limits? Because believe it or not, there are actual limits to home prices in which you can use these loans. So let's jump into it. So the FHA loan is a government-sponsored lending program that offers a lower down payment option for home buyers, 3.5%. The FHA 203K loan is exactly the same thing. It's the same type of loan. However, this lender can set up to $35,000 set aside to repair the property to current market conditions. So maybe you go into a property and you're like, you know what, this is kind of cool, but the paint's old, it needs a lot of flooring, it needs a new kitchen, baths are horrible. Well, the FHA 203K loan can help you take advantage of buying a property under market value. If you've seen any of my other videos, I talk about condition being the #1 deterrent to price. So if you do want to catch something under market value, a 203K loan is perfect because there's up to $35,000 in repair costs that can be used towards the home. Once that's done, the loan refinances into a traditional mortgage as if you were to buy a home that was already cleaned up. So let's dig into it a little bit more. So what makes it different? Let me move my little head box up here. Okay, so with an FHA loan, there's what's called an upfront mortgage insurance premium. This is because usually if you're putting less than 20% down on a property, the lender's going to look at the borrower is a little bit riskier because they're not putting as much capital into the home. And the lender has to insure it for a higher value, which can fluctuate as we're about to see here at the COVID-19 pandemic happening. But upfront mortgage insurance premium, 1.75%. Good news is it can be rolled into the loan, but it's important that you know this cost is applicable universally. Every lender is going to apply it. On top of that, there's monthly private mortgage insurance of 0.8%. Now, a thing to take into consideration, a lot of people are like, you know what, I don't know if I want to do a down payment loan because, you have mortgage insurance and you have all these other, these fees that come up that just might not make it worth it. Well, in reality, guys, you need to pay attention to appreciation. Every year, California properties can go up anywhere from 3 to 10%. I saw in the San Bernardino market, Rancho Cucamonga, a year-over-year increase of 8% across the board for everybody. Now, I do expect that to flatten out with COVID-19 impacting jobs and buyer availability. But nonetheless, it will come back, and 5 to 10% increase can more than make up for that 0.8 and the 1.75 fees that are incurred here. So, and also if you find a property below market value and you renovate it before you move in, you're forcing appreciation on the spot. So that's where that 203K loan can come in. Again, it's anywhere from $5,000 to $35,000 for the 203K. Remember, different type of loan. But those are put into an escrow account, and then you're gonna have to manage the construction and prove that you've done the work too. So what are the rules? With an FHA loan, they're actually a little more lax with credit. Credit needs to be 580 or higher. I know things are changing now in the lending space because of COVID-19. So you're just gonna you can give me a call. We can talk about your specific situation and see what works for you. It also needs to be your primary residence 2 out of 5 years, and you need to occupy the property within 60 days. So this is basically preventing people from investing and flipping a home with a low down payment. So the misconception here is that a lot of people think, oh, it's only for first-time home buyers. That's not the case, guys. The thing is, you can only have one loan in place, but if you sell a home that has that loan, an FHA loan, you can buy another property with the same loan, right? So it's not just for first-time home buyers. And it's a great opportunity if you want to keep your current property and rent it out for cash flow. And you do have the other 3.5% down, we can go ahead and consider your situation and look at that for you. Also, if you're going to buy a home that's already flipped, say you don't want to deal with that, you just want the home finish, you have to wait 90 days after that investor flipped the homes, and what we call seasoning title, in order to qualify for that particular purchase. Now, like I mentioned earlier, guys, there's limits in every county to this particular program. So San Bernardino and Riverside, as of 2020, the limit is $442,000. So you can use anything $442,000 or less, you can buy a home with 3.5% down. In LA, since properties are a little bit more, it's about 765. San Diego is 701. And Orange County, I didn't put it on here, I forgot, but it's in that realm of 700 to 750 as well. If you have any questions, if there's any particular subject or property you want to look at, reach out my way. I'm happy to help. So those are the rules of an FHA loan. Again, those are the basics. FHA 203K loan, wonderful opportunities to get into a property or into your next property for that matter. So if you have any questions, again, I'm Eric Loya, guys. You can reach out to me with a direct message. I hope you found this information valuable, and I hope you have a wonderful day. Take care.